Now, Nomi Prins is a journalist, senior fellow at Demos. Her latest book, It Takes a Pillage, Behind the Bonuses, Bailouts, and Backroom Deals from Washington to Wall Street. By the way, GE's announcing their biggest profit ever. Biggest profit ever today. We're going to go over some of those numbers. And they paid zero tax. But they're lobbying through Obama to raise the middle class's taxes, which is then paid in bailouts to them. Man, and they've got the screaming hordes of poor people. In polls today, 70% in an AP poll want to get rid of capitalism and rob the middle class. No wonder you're poor. Because you're stupid. I'm sorry. You let these bankers rob you. She is the author of Other People's Money, The Corporate Mugging of America, of devastating expose into corporate corruption, political collusion, and Wall Street deception. And I didn't mean that towards all poor people. I mean those that want to get rid of capitalism because you think that's going to help you. Other People's Money, and chosen as the best book, 2004 by The Economist, Barron's, and the Liberty Journal. And her other book, Jacked, How Conservatives Are Picking Your Pocket, Whether You Voted for Them or Not. It goes on NomiPrins.com. And she also appears in the New York Times, Fortune. The list goes on and on. Nomi, thank you for coming on with us.
Thanks for having me back, Alex.
I know I'm ranting here today. When I saw the S&P announcement 3 days ago, it shook me. I knew it was coming, but to see that happen and then to see the White House come out and say that it didn't matter, and then we learned that they secretly were trying to block S&P, Standard & Poor's, from doing that. As somebody who's studied this, who worked as a managing director at Goldman Sachs, running their international analytics group in Bear Stearns in London, what does this really signify, and what does this really mean?
Well, first of all, it signifies that S&P is having a minor little wake-up moment because, they're right. The United States does have a debt problem. Hello, this is a really obvious conclusion. The fact that the White House was trying to suppress the information is really part of what continues to occur from Washington. There's this notion that bailouts worked, our financials are coming back, our recovery is on the rise, and all of this stuff that no one actually feels in real life, but the illusion continues to get perpetuated. So trying to get S&P to shut up was a way of trying to continue with that illusion. S&P, of course, is the same rating agency among Moody's and Fitch that continually upgraded and kept high the ratings of all the toxic assets that clogged our financial system, that were spewed out by the banking system, and that continue to reside at the Federal Reserve and be backed in many other ways by the Treasury Department, not least the issuing of $4 trillion worth of Treasury debt in the last 2 years since that financial crisis began. So this is something that Washington would really prefer we don't keep picking at, and that S&P would have just stayed dormant and not mentioned in the way that they did in their announcement that they did on Monday with their report.
Now, Nomi, what does this signify when Geithner engages in what I call financial terrorism and says, if you don't raise the debt limit, if you don't keep the spending going, we're going to default? Am I not correct, or correct me if I'm wrong, in saying that it's a technical default to have the Federal Reserve monetizing 7/10 of the new debt, and to have the Chinese and others dumping new purchases, cutting back on their purchases? I mean, are we not seeing a real-world default going on right now? And to have him scapegoat anybody trying to cut spending as the authors of the ongoing depression, what's your view on that?
Well, you call it, I call it financial homicide by the banks, and Geithner's sort of the accomplice, because under him, the Treasury Department, again, increased the Treasury debt by $4 trillion. So for him to come around and say, oh, by the way, if Congress don't increase the debt cap by whatever amount, whether it's a penny to $1 trillion, it almost doesn't matter. The idea is that if we don't incur more debt, our debt will become less worthy, which is just A, not logical, and B, part of how Geithner has operated through the bailouts and since he's been Treasury Secretary, which is to continue to deny that much of the debt problem, most of the debt problem, arguably all of the debt problem, has happened because of this imparting of debt to bail out Wall Street, to subsidize the financial system, to go back and forth between the Fed, who buys the debt, the Treasury increases the debt, the Fed buys the debt, and has this sort of back forth ball going between them, which only decreases our value as a nation, our entire books, our balance sheet as a nation. And the Fed will continue to do this. We know that when June comes along, the Fed is going to go from QE2 to QE whatever. They might call it something else. They will find ways to continue to throw this ball.
Yeah, I've heard Bernanke. They're calling it a continuation of QE2, which is really QE3.
Right, and what it really is saying, look, we're going to continue to pretend that we're either going to print money or buy debt or move stuff back and forth between the Treasury Department and the Federal Reserve, which will decrease the value of the United States books as a whole. We'll just keep on doing that, whatever we call that, and we will never say that the reason we are doing that is because we are backing a faulty financial system for which we started to do this to begin with, and that in our history as a country, we have never had this amount of outpouring, an increase in our debt, and flux between the Treasury Department and the Federal Reserve as we've had in the last 2.5 years.
Nothing near it.
Blame spending cut, and then blame or even discuss or even remotely give credence to the crazy debate that continues on in Washington about $38 billion per year of spending cuts, which is 1% of the budget, and less than a visible piece of a percentage of the debt that the Treasury Department has incurred and the Federal Reserve supports.
Well, that's right, because there's all of the commitments, there's all of the thousands of trillions, many economists say, in derivatives that they've tricked us and other nations to sign on to. But, Nomi, I mean, you worked inside the belly of the beast, and when we look at this, S&P is saying, hey, the emperor has no clothes. It's the fact that we're incurring more debt. It's the fact that you're monetizing debt is why the outlook for the AAA rating is not good. A, explain to people what losing the AAA rating will mean. And then B, is this not the policy of the private offshore-owned Fed to wreck the U.S. dollar and economy so that these big international institutions can come in and buy things up for pennies on the dollar and move towards this IMF, World Bank, Bancor digital system where we'll still have our regional currencies, but now the private bankers will be in full control outside of Congress, even being able to comment?
Well, yeah, I mean, I'll start with the middle, and that the Fed, whether it's a will school policy or a strategic policy, I go back and forth between that the result of this policy is a devalued currency is devalued debt. Now, when S&P comes and says there's a potential, and they said that the United States debt is on negative watch, they didn't even come out full force and say we are downgrading the U.S. debt, probably because of conversations going on with the White House. So even though they put out their report, there could have been a little bit of back and forthing on that. But what would happen if the United States debt rating was decreased? It would mean that the value of our Treasury debt, the amount that we would have to basically pay other countries to borrow money from them, or effectively, they buy our treasuries, but the transaction is we're paying them interest. They are buying our debt. It would cost us more to do that. And if it costs us more to do that, number one, inflation goes up. The cost of keeping this illusion going goes up. So then the Fed's in a position where they have to, that they can't bring rates down below zero. They're already quite low to the private banking system. The private banking system is getting money from the Fed at basically zero interest, and then either using it offshore to speculate and increase profits and not have those taxes reverted back to increasing revenues in Washington, or lending them out to whether it's small businesses or through credit cards or through auto loans or whatever at high interest rates relative to the almost zero that they're paying for it. So that, I believe, would continue, which would just mean that the United States continues its downward devaluation spiral. I don't know if the S&P is going to turn around and actually downgrade the U.S. Debt. It should. The value of our debt, like the S&P report had indicated, should be downgraded. We continue to create money to pay debt. None of this is real revenue. The real revenue, the real profits that private banks and other companies like GE are making are not reverting in taxes back to the Treasury Department. We as individuals pay 81% between individual tax returns and Social Security and other types of payments into the revenue of the United States. Corporations pay 8.9%, less than 10%. So that will continue to happen. Money will continue to divert offshore. Whether the IMF turns around and creates a multi-platform electronic currency, or there's continued talk all the time of some sort of a global currency that's not the dollar, that's going to be a little bit further in the future, because the dollar, as weak as it is, and our debt as invaluable as it is, and the economic policies of the Fed and the Treasury Department, as dangerous as they are to middle and general America, the dollar is still the prevalent currency, which actually devalues the economies globally.
That's right. We're seeing G20 engaged in coordinated devaluations of every major currency, accelerating the overall increase in commodity prices.
And they're all enabling, and this is all to enable a really bad and dangerous economic policy by the Federal Reserve and the Treasury Department.
And meanwhile, Obama and the Republicans as well are telling us everything's fine, and the Republicans are scapegoating unions and welfare moms. I've said it, you could send them all over the plank. You could send them to Pluto, and I've looked at the math. I've had other economists on. It'll do nothing compared to the banker bailouts, and the Republicans, except for Ron Paul and Rand Paul, they're not saying a word about the trillion-pound elephant in the living room. I mean, it is incredible.
No, they're not, because they're all part of, or most of them are part of this illusion that what happened over the last 2 years was necessary, that floating the banking system, that completely changing or adopting an economic policy based on debt and buying our own debt and really just eating our own future in that manner is somehow going to create a recovery. And that if you scapegoat the unions or individuals or whomever that pay 81% of what the revenues that go into the Treasury Department are, when the corporations are paying less than 10%, you can't ever. You can be debating the budget forever. You're never going to get to an equal or a balance from this point, because we're so far in the hole because of the debt that was created. We have to pay $430 billion a year just on the current debt. And if the value of our debt, if S&P, say, does ultimately downgrade the United States, goes up, that number increases. And that's just starting day one in the hole at $430 billion.
And we got to break. Powerful info. And here's the issue. We're having this gradual slide into third worldom, but if a Moody's or an S&P does downgrade the debt, we could see a stock market crash that day. We'll talk about that when we come back. Stay with us. Yes, we're going to keep her a little bit into the next hour. But I want to calmly point something out here. The Republican leadership says there's nothing wrong with profit in America. You're a communist if you're against the mega banks. It's the 6 big mega banks that communalize our wealth and then transfer it to themselves. They make loss public and their profits private. And here's GE, Wall Street Journal today. Their profit jumped 77%, and they paid 0 corporate taxes because they're mainly offshore. They get waivers from their new coal power plants while shutting down their competition. They head up the president's economic board, the former CEO. Just like if you're a campaign contributor, you don't have to buy the insurance. So that's going on. I want to play a Newt Gingrich clip here from CNBC where he says, fire Bernanke. So it shows the system's looking for scapegoats. He's just a front man like shark teeth. New ones will roll forward. But Nomi, I mean, being a former managing director at Goldman Sachs, again, you're uniquely positioned to understand this, and you predicted it almost 7 years ago with precision, because I've read your book years ago. Understanding this, we're seeing this slow slide into inflation and into job loss and stagnation. But if a credit agency comes out a month from now, 2 years from now, one of the big three, and does ever get rid of our AAA rating, it might not take another year after that for full implosion, because couldn't that signify the start of a panic? We already saw one a little bit earlier in the week, and then cause a rush to the exits globally out of the dollar, even though it's stacked up like toxic waste?
It can do a rush that way, and also what will happen is there's going to be a moment where the Fed is going to have to really, sort of come to the realization that the policy of propping something up actually has been negative, which we all know, which S&P is trying to point out, that if you continue to create and buy debt in a circular fashion, ultimately that's not a stable economic policy. So if rates go up, if the ratings come down, and therefore the cost of our money goes up, the cost of our debt goes up, it's going to, first of all, it's going to deeply piss off the banks. And so what you're going to see initially is a large stock market loss in bank value and corporate value, because all of these companies, GE included, you mentioned GE. GE also got $140 billion of guarantee for debt that they created through GE Capital, their financial unit, during the bailout. I mean, it's not just that they're not paying taxes and getting $4 billion refunds and making all these profits offshore. They were getting bailout money when things were bad. What's happened is GE and the six major banks and all the corporations that continue to shun taxes and make profits, is they're doing so on very cheap money, and so they can position themselves and report to analysts and report to stock investors that they're doing well from that particular standpoint, and that's why they get their investors in, and that's how
even Gingrich said that. He said they get first use of the money.
Exactly.
And some credit card rates are now at 79.9%. And they write the laws, they write the loopholes where they can be tax-free offshore. And then GE, on top of all this, is the big group, along with Soros and others, lobbying to raise my taxes so they can suck it out of me through the government. I mean, these people are brazen.
Right, they want you to subsidize their profits, and not just in a limited way, not just obviously by buying their products, which is how it used to work, but in basically funding them, and funding them through your taxes, and funding them through the continuation of this program of the Treasury Department and the Federal Reserve, which has them creating profits off of cheap money and shirking taxes. You've got the two. They're shirking taxes. They're not giving them to the Treasury Department. So the Treasury Department is increasing our debt in order to basically make that whole, and wanting to sort of backdoor increase our taxes, because ultimately that's what happens when a budget is in deficit and there's not revenue coming in from the people, the companies that are making
Nomi, stay there. We got a break. Back in 1 minute. Incredible. I want to talk about the time frame, what you believe is going to happen next. Nomi Prins, best-selling author, journalist, former managing director at Goldman Sachs, running the international analytics group at Bear Stearns in London. She joins us, whistleblower, NomiPrins.com. Our websites are Infowars.com. She'll be with us about 15, 20 minutes into this hour, because we've got a lot to cover in this short segment, finishing up the point you were making before the break. And then I want to pose the question, historically studying this, how do you see this ending? Because the possible endings from my research run from bad to worse. So we're just hoping for the bad.
Right. I mean, I think right now what's going on, and just to follow on from the point we were talking about before, is that the banking system, the major banks, the major companies that also have financial arms and all of whom have offshore collectives, they count on cheap money. They count on getting funding from the Fed, on having rates be so low, because they can in turn either lend it out, which is sort of a simple job, and get a lot back on it, or they can speculate with it and go further and then not have those profits taxed, et cetera, or not have those revenues revert to the United States. So they're basically getting free money from the United States and not returning anything for it. And that's a really good game. You can ride that for a while. But what will happen is, if the value of our debt is officially downgraded, if there's no way that the Fed can reduce rates below zero enough to effectively maintain giving cheap money to the banking and corporate system, it's going to create a colossal pain to them. Pain that effectively we have been subsidizing and pushing forward and away from them anyway. But what will happen is, once they have to pay more, once their funding goes higher, once their profits deteriorate because the cost of the money that they use to inflate them has increased, they will be in a position where they won't look as good, where they won't show the kind of high profits that their stock investors are used to seeing. That's going to create a plummet in the stock market. And that will be very fast, and that will be very sharp if our debt is actually rated lower. Now that's a big if, because I do believe that the S&P and the White House can continue to have a back and forth on this for a long time. The fact that the S&P has only now just mentioned the fact that debt's a problem is not comforting. The fact that we have a private rating agency even doing this is also uncomforting. So there are ways for conversations to happen, I believe, where this whole scenario might be far off. But if the rating goes up, if the value goes down, if the cost of money to the financial system and the corporate system is high, that will create lower profits. Really, not just what we're getting to see after the offshore parts are taken out. That's going to create a problem. And I think right now what we're seeing with the increase in commodities, the increase in silver, the increase in gold, in oil, I think this is where a lot of the financial system is putting a increasing percentage of their money for now.
Because they know that in a collapse situation, that'll be the only thing of value, which signifies that all the thinkers and the insiders are getting the farmland, the gold, the silver, the raw materials, the rare earth minerals, signifying that they understand there's really no way out. I mean, is there any way out under the current management, or even if we got good people in there, is this reversible?
I think it's not reversible on a dime. It's slowly reversible if the right policies are taken. There's $1 trillion of treasuries just there's more, but $1 trillion from just the banking system parked at the Fed that's there in excess reserve that the banks don't even have to put there, but they're putting there because they get a little bit of interest in it. They're getting the cheap money, and it's kind of safe for them. And for example, that's money that could be used to reduce the debt because it was money that was given to the financial system when it was a problem, and now it's just being parked at the Fed.
It's another form of inflation. Stay there.
Exactly. You can revert back.
Absolutely. Let's come back and get into Newt Gingrich and the rats leaving the sinking ship. Nomi Prins is our guest for the rest of this segment. Gerald Celente is coming up. And we'll also jam in some of your phone calls in the next segment. CNBC, $6 gas could happen if dollar keeps getting weaker. But the White House says everything's fine. Oil above 112 on signs of strong U.S. crude demand. The Saudis striking back after the globalists are trying to overthrow them, saying that there's not high demand, which is asinine, and cutting production. GE's profit jumped 77%. So did J.P. Morgan, Goldman Sachs, Wells Fargo, all the big insiders. GOP escalates debt limit demands, but Geithner basically holds them hostage, saying the default's going to be your fault. That's, again, the opposite of reality. CNS News reporting federal borrowing on pace to hit debt limit in less than a week. That's just some of the news we have there. But for Nomi Prins, former managing director, Goldman Sachs, running their international analytics group at the Bear Stearns in London, I want to pose the question, then play the clip and get your answer. But undoubtedly, Zbigniew Brzezinski last year gave a speech at the CFR in Canada and said for the first time humanity is awake. They're not just looking at the puppet front parties worldwide from India to the U.S. They're looking at the banking cartel, the inner coterie. They're angry. The elite is in trouble. They had the 100-year anniversary of the Jekyll Island meeting a few months ago, and they released a clip of Greenspan admitting there had been criminal activity in the banking sector. We see Gingrich coming out and saying, fire Bernanke, take the Federal Reserve's domestic power away, only let them deal with dollar value globally, which is really doublespeak. So they've gone from denying that the Fed ever did anything wrong, and Greenspan telling Lair NewsHour 3 years ago that they're above the law and Congress has no power over them, to now blaming each other and pointing fingers. And Gingrich, a big globalist, a one world government promoter, a carbon tax promoter, a Judas goat to control conservatives. I also heard him on Hannity yesterday, saying that the Federal Reserve has done this to us. This is a major sea change. A major sea change, because the polls, over 80%, want to audit or abolish these guys. Because you create $1 through the Federal Reserve System, $1 of debt is created. At the end of this Ponzi scheme, it's impossible to pay it all off, and it vertically integrates all the wealth to the insiders. I want to get Nomi Prins' insider take on this in a moment. First, here's a minute of Gingrich yesterday on CNBC making the rounds, getting ready to scapegoat, and though he's untasteful, he's still just a front man, Ben Bernanke. Here it is.
All right, Newt, let me start with this. A bad landmark today, and you know stuff about this. Gold hit $1,500 an ounce. Another sign of the collapse of the U.S. dollar. And yet, on the campaign trail, I don't hear any Republicans talking about the destruction of the dollar, the surge in gold, the inflation of food and fuel.
You hear Ron Paul.
What is up with this? Why is the GOP not looking at this key issue?
Because they're part of it.
Well, I can't tell you why they're not. I think that Bernanke has done the chairman of the Federal Reserve, has done a terrible job. I think he completely misunderstands the role of the Federal Reserve. The Federal Reserve ought to be keeping the dollar sound. It ought to be protecting the American dollar and making sure that it's a store of value people can believe in. But for that to happen, the Congress and the President have to do their job, which is to have a fiscal policy which is responsible, which moves back towards a balanced budget, and to shape the tax and regulatory environment so that we can be job-creating, economic growth, and get back to the kind of dynamic country that has...
It's an 8-minute clip. It's up at Infowars.com and PrisonPlanet.com. And again, he went on Hannity and said, fire Bernanke. But the point is, how about fire the Federal Reserve System? Well, he went on and said, split it in two. But Kudlow was pointing out that no Republican but Ron Paul or Rand Paul is pointing out the inflation tax and where all this is headed. But does this signify the fact that they realize they're not invincible and that they're going to be held accountable, that the finger pointing is starting?
Definitely the finger pointing is starting, and as you mentioned, there people like Ron Paul have been talking about it for years, and also Bernie Sanders. I mean, it's been across aisle, a couple people for years that the Fed is out of control. I would just add, though, and this isn't being discussed, that the Treasury Department is what is going on between the Fed printing money and substantiating money by buying the debt that the Treasury Department is printing is that it's really a collaborative effort.
Absolutely, because it's always former Goldman Sachs or J.P. Morgan people who are over at the Treasury.
Right, or the New York Fed. So basically, there's this revolving sort of circular door between all of the, between the Fed and the Treasury Department and then back to Wall Street. And so that's the economic policy that we have. It's that you create debt to float the financial system and to float the kind of corporate profits that are based on having cheap money and using it to profit, to go offshore, to not revert back in tax revenues. That is our current economic policy. The fact that the White House, the fact that not a lot of people in Congress seem to be discussing this or getting this, and it could be one or the other depending on the individual. It could be stupidity or just disacknowledgement. But either way is a problem, obviously, for our entire economic policy. I think you have to point fingers at the Fed for being an enabler. You have to point fingers at the Treasury Department for being an enabler. And Congress doesn't get a free pass because, for the most part, there hasn't been a lot of standing in the way. There hasn't been, with the exception of Paul and a couple people, standing up and saying, you know what, this isn't a good policy for our country. Not just because the Fed is, basically quasi-private institution that helps the private institutions that are on its board, but because it's hurting our revenues. It's devaluing our money. It's bad for the American people who then have to pay more for everything that we cannot do without, which we see now in the inflation that's happening in commodity prices and things that we use and need like oil. And yes, it'd be great if we didn't have to, but when we do, and since we do in the meantime, all of that extra cost comes down on individuals who aren't lobbying and aren't running the Fed and aren't running the Treasury Department.
Well, certainly we have a corrupt Congress, a corrupt executive, but if you look at who gives them the majority of their campaign contributions, both parties, it is the inner group of Wall Street and London and European banks that have financed this. They're the ones that came in and got the 1913 system in place that allowed this to happen. Just like Obama went to the Rockefeller-created UN and got their authorization to attack Libya, not Congress. The issue here is without the Federal Reserve in place, they could have never engaged in this.
Well, right, and just to put numbers numbers on this. In the last decade or so, just the Wall Street contingent, just the financial contingent has paid over $1 billion in lobbying money. And that's like nothing. It's a lot and it's nothing. It's like a year of bonuses. Well, it's much less. It is such a small amount to pay.
There are brokerage firm heads that I've seen there are brokerage firm heads I've seen, Nomi, that make billions a year. I mean, they're buying the Congress and the president for $1 billion a year. This is cheap.
It is the best use of money. You basically pay almost nothing to get everything in your favor. Then you get money at 0% when after you have screwed up massively and contributed to a crush in the general economy. You don't share. You don't talk about reinstating, refinancing mortgages or reducing credit card rates or helping sort of lower the debt in general through the country. You just increase everybody's cost of everything, and that's really what we're dealing with. And it's an economic policy that will and will continue to deteriorate the United States as a country. And it would be nice. It would be honest, which doesn't happen for Washington to at least admit the reason for the magnitude of our debt crisis now. We've been going in this direction for a while, but particularly in the last 2.5 years, the magnitude of the crisis and why it has happened. And not because unions have high pensions, but because we have doubled our Treasury debt in a very short period of time to float a banking system that doesn't pay revenues into our country.
And now we're getting ready to, technically, countries starting to move away from buying T-bills. That right there shows that we, in the real world, the court of public opinion and international finance, are losing the AAA rating. And every time a country goes down that road, every time countries move down this road of monetizing debt, it always ends the same. We know, they know. And the only thing I may disagree with you in closing is you're saying they've screwed up. Record bonuses, vertical integration. They've put the police state in place. They've been gearing up for this for decades. This thing is clearly planned, and we have a lot of their own documents showing that, just like it was planned by the very same banks doing this to third world countries, Nomi.
Yeah, no, it is strategic, and it has worked in their favor. What I'm saying is, from our perspective, them having had a relapse momentary in the fall of 2008 just increased the amount of money and the amount of debt for our country and amount of money to them at zero rates. And I think that, yes, in fact, if that was completely strategic in and of itself, they certainly created a toxic asset bubble and an over-leveraged bubble that caused them to implode for a minute.
Made money on the way up and then had us make money on the other side.
Yeah, and we pay it.
Nomi Prins, thank you so much for joining us. Really amazing information. Folks can learn more at NomiPrins.com, and I look forward to speaking to you again in the near future. 30 seconds, closing comments.
Again, I think we continue to head down in terms of our value as a currency, our value as an economic power, and I think that the continuation in Washington will be to ignore this and pretend we're in a slow recovery, pretend everything's okay because it's people's egos and jobs on the line, and that ultimately comes down on us.
Absolutely, and then they pose as our saviors and get even more power with all their media talking heads telling us that they'll save us if we just give up our rights and worship the private Federal Reserve. Nomi Prins, we'll talk to you again very soon. Thank you.